welcome back. It's all about the Benjamins today. From the minute I opened my eyes this morning, down 600, 700, 800. Do I hear 1,000? The market was actually down 1,000 at some point today. Little bit of a comeback here, down 970 as we speak. We have experts across all of Wall Street texting, calling me, giving me an idea what's happening, what they're looking at. My man, the golf father, is over at on the U.S. dollar desk telling me that they're panicked in the markets. And when the markets are panicked and people are running for a flight to safety, they go to dollars. And if dollars aren't safe enough for them, where they go is to gold. And to bring us up to speed on what's happening in the gold markets, our good friend Deric Scott joins us from metals.com. He's vice president and analyst. Hey, Deric. Thanks for joining us today on short notice, but it's got to be a busy day over at metals.com with gold on the fly.
It absolutely is, but it's been busy all year. I mean, gold's up. Let me put it this way. From January 1st to today, you would have needed to hold a treasury bond for more than 150 years to get the types of returns gold's had in just the last few weeks. So when you talk about safety, people also want returns. Nobody wants to be losing to inflation. When you have the coronavirus that's exploded, I mean, just to give you an example, in South Korea, the coronavirus exploded by more than 500% from Monday to Friday. It just shows how contagious this is, how uncontrollable it is, and how when we saw the last time you had me on the show was because of the trade war, because we were disrupting manufacturing shipments from Asia to the United States and Europe, and that had an obvious big impact on the economy. But now we're talking about a virus, which is, you know, with the trade war, there were ways to get around the tariffs. You can't get around this virus.
So are you seeing an uptick of money come flying over into gold right now? Is that the flight to safety trade?
Absolutely. Morgan Stanley, Citibank, Bridgewater and Associates, Goldman Sachs, they all raised their price targets either end of fourth quarter, beginning of fourth quarter to about $2,000 an ounce. I mean, we've already seen a huge jump, but another 25% for the year wouldn't be a big deal, considering we were up 19.8% for 2019. You have to realize stock market's at all-time highs. You know, this is the longest economic expansion that the United States has seen in decades. I mean, people are just ready to jump. They're waiting for that moment when we start our descent, and they're all just getting ready by getting in their bunkers made of solid gold.
Well, look, for the last 6 months or so, I've been checking out another correlation that I thought was kind of strange, that, Bitcoin is a place where people who can't get into physical gold, they might feel like that's a safe way to get some cross-border stuff going. I thought Bitcoin was usually up when the markets were down. Today, I see gold up, I see oil down, I see market down and Bitcoin down. It's a little strange trade to me. Is gold the place to be?
Well, put it this way, when you start to look at Bitcoin, when you start to look at it as a safe haven, I mean, it's really not a stable store of value, and it has not had an opportunity to be fully tested. I mean, gold's been around since the Egyptians. I mean, Moses came down Mount Sinai and they were worshiping a golden calf. Gold's time tested. It's been around forever. There is no crisis that was able to wipe out gold. And this is just another example of how, look, if you're looking for something safe, you want to go to electrons or do you want to go to bricks? So gold is definitely the place to be if you're looking for a safe haven investment. There's no question about it.
So you guys over at metals.com, if some people out there are watching, a lot of our audience, they're real patriotic folks, and they like to stay prepared. They could reach out to you guys. You can give them a little advice on how they could participate. And
absolutely, you can reach out. You can reach out to me directly. You can just go ahead and give us a call. Just ask for me or ask for any of my colleagues. We'll be able to assist you, because in all reality, look, the top investment banks, top hedge funds, top advisory firms, they're talking about another 30% before the end of the year. I mean, it doesn't get any better than that in a safe haven investment. This is insurance that pays you.
Wow. All right. Well, that's Deric Scott from metals.com. Deric, thanks for that insightful commentary. We'll check back with you if this thing continues. If not, we'll check back with you anyway, because these guys are always on point at metals.com. Lost in some of the news today, Warren Buffett came out with a bunch of thoughts on the economy, but you might want to take this one and write it down and think about it a little bit. In the last 6 months, Warren Buffett has cut his holdings. The Berkshire Hathaway has cut their holdings in Wells Fargo by half, and they've increased their holdings in Bank of America. Bank of America is also doing buybacks. So as it stands today, the smartest and richest guy in the world owns double the Bank of America that he does Wells Fargo. And if you missed it this weekend, Wells Fargo hit with another $3 billion fine for basically ripping off millions of U.S. Bank clients they had and opening up fake accounts in their names. So you be the judge, but Buffett likes Bank of America. It looks like he's moving out of his position in Wells Fargo. We'll keep you posted on all that and more. I'm going to come back right after this. Frank's off. He's down in Atlantic City for a couple days doing his radio show, so I'm going to come back and correct my own mistakes. No, I'm not. I'm not going to correct myself at all. We're going to come back and wrap it up right after this.